We all think about building a good financial foundation, making smart choices to get some real security. But sometimes it feels like everyone else knows this secret code we don't when it comes to investing. There's this one name, though, that everyone knows in finance: Warren Buffett. I feel like you hear it everywhere. Watch what Buffett's doing. It makes you wonder if we could learn something from him, too. That's how I got started with investing. I heard that advice to just follow what Buffett does, and let me tell you, it's been quite the ride. There were some really exciting moments when I started to see things go right, and then there were some tougher lessons. The kind that really stick with you that I learned the hard way. But it's all about figuring out how to use what Buffett does, and also when to trust myself and stick with it, or when to say, okay, this is not the right move for me. I've learned a lot about investing just by trying to follow Buffett's lead. Stick with me until the end, because we're going to talk about what it's doing in the market right now. It's pretty interesting. So let's go back to before 2017. Back then, the way I understood Buffett was very simple: buy good companies and hold on to them for a long time. But as I started to learn more, I discovered there's actually a lot more to it, like value investing, which is finding companies where the stock price seems lower than what the business is worth. Investing for the long term, so those returns grow over time. Sticking with companies and industries that I actually understand. And the idea of the margin of safety, which means having a buffer in case things go wrong. I remember the first time I tried to use these ideas. It was with this consumer goods company brand I already knew and trusted. The stock price was down because the entire market was down. But when I looked at the business, it was solid. Their brand was still strong, and it seemed like people were undervaluing them. So I decided to invest. And you know what? Over the next few years, the investment did really well. Steady growth and consistent earnings. It felt like a sign that I was on the right track using Buffett's principles. Okay, so then 2017 rolls around and Buffett invests in Apple. Buffett, the ultimate value investor, puts money into Apple. At the time, people were debating whether Apple had already hit its peak. iPhone sales were leveling off, and people questioned whether Apple could keep innovating. It seemed like Buffett was suddenly embracing the newest tech trend. So I took a closer look to try to understand why he was investing, and then it hit me. He wasn't just buying a tech company that makes gadgets. He was investing in an incredibly strong brand and the loyalty their customers have in a very, very strong ecosystem. It wasn't about the newest features, it was about how strong Apple is as a company. So I decided to invest too. And wow, within a year, the investment had grown by 40%. And it made me realize that Buffett doesn't just chase trends, he really knows how to find and take advantage of long-term momentum. I definitely felt more confident, like I was starting to see things more clearly. Now fast forward to 2019 and the Kraft Heinz story. So after the Apple investment went so well, maybe I got a little overconfident. Kraft Heinz looked like a great value opportunity. Big name brands, huge scale. And Buffett had been involved with the company before. When the stock price went down, it seemed like a perfect time to buy a great company for a bargain. But it wasn't that simple. People were changing how they ate. They wanted healthier options. And these big brands weren't adapting. And Kraft Heinz had a lot of debt. That drop in the stock price wasn't temporary, it kept going down. I held on to the stock longer than I should have. Part of it was because I thought if Buffett was involved, things would turn around eventually. But they didn't. I ended up selling in 2020 and lost 35%. It was a really tough lesson. You, Buffett, can get involved with investments that don't work out. More importantly, you need to know when you've made a mistake and get out, even if it's someone you really respect. It was definitely a humbling experience. It taught me to always keep looking at my investments to make sure they still make sense. After that Kraft Heinz experience, I became much more careful and focused on companies that were strong for the long run. That's when I noticed Bank of America. Buffett was increasing his stake, and I don't say folk how boring. This was when everyone was going crazy for tech stocks and meme stocks. Everyone was trying to get rich fast. But Bank of America, they just made money consistently. He had a long history of paying dividends and made a real advantage over other banks. It wasn't an exciting investment, but it was reliable. And over the next 2 years, it grew steadily. I reinvested the dividends and made a few small adjustments. It wasn't a huge overnight success story, but it became a solid, dependable part of my portfolio. It's the kind of investment you don't have to worry about. That's when I really understood why Buffett likes those consistent, stable companies. You don't always have to hit a home run. Sometimes it's better to just keep getting on base. But let's talk about one I totally missed. Tesla. I didn't invest in it at all. I thought it was overvalued and too risky, and I didn't think it fit with Buffett's style. And man, was I wrong. Tesla's stock price went through the roof. I watched my friends make a ton of money, pay off debt, even put down payments on homes, all from Tesla. And I dismissed it completely. That was a wake-up call for me. It made me realize that Buffett's ideas are amazing, but they shouldn't limit you. His core strategies are timeless, but the world changes, and sometimes you have to be open to big shifts even if they don't fit perfectly with what Buffett usually does. It taught me that it's important to think for yourself and not just blindly follow someone else. Which brings us to today. I've been paying attention to what Buffett's been doing lately, and it's really interesting how much cash he has right now. Over $300 billion. It's the most cash he's ever had. He's also been selling off some of his stocks. It doesn't seem like he's panicking though. It feels strategic, like he's getting ready for something. He's not saying much. He's letting his actions speak for themselves. It seems like he's waiting for the perfect time to make a big move when he has a really good chance of winning. Honestly, it's changed how I'm investing. I've taken some profits from my investments recently, and I'm building up my own cash reserves. Not because I think the market is in a crash, because it makes sense to be ready to jump on good opportunities when they come along. If you're finding this interesting, please hit that like button. And if you like hearing stories and tips about making money, subscribe to our channel, Rich by Friday. We'd love to have you join us. Feel free to leave a comment too and tell us what you've learned. So what have I learned from trying to follow Warren Buffett's example? It's definitely not about copying every trade he makes. It's about understanding how he thinks. Being patient is so important. Thinking long-term is key. It's a good lesson to learn to be okay with investments that might seem boring, but are actually very profitable. And the most important thing is to learn how to think for yourself. Buffett gives you a really great framework, but using it in the real world means you have to do your own research and make your own judgments. It's about understanding why he does things, not just what he does. Speaking of what he does, let's look at some of the recent changes in his portfolio. There have been reports that he's been selling off a lot of his Apple stock and reducing some of his investments in banks. But then you look at where he's putting some of that money into companies like Constellation Brands, Domino's Pizza, SiriusXM, Occidental Petroleum, Verisign, and Pool Corp. And of course, that massive pile of cash that keeps growing, it tells you something, doesn't it? It seems like you're being cautious, maybe thinking there will be better deals to be made later on. So trying to learn from Warren Buffett wasn't about becoming exactly like him. It was about taking his ideas and using them to figure out my own way of investing. Focusing on patience, thinking long-term, and being able to think critically. Those are the things I've learned. And seeing how much cash he's holding now makes you think. It seems like the Oracle of Omaha is preparing for something. What does he see coming? And more importantly, what moves should you be making with your own investments? It's something to think about.